Good morning. Good morning. It's almost afternoon. Okay, let's get straight into the mix here. Let's talk about this increased, higher than expected existing home sales. Now, this is due to um, I think the right word is plethora of factors. First, we should mention the uh, low supply, the low amount of supply in the markets for houses. So, it as well as the year over year declines. So year over year declines in these home sales is a long term factor. Now they also tried to mention that the GDP will be bad this quarter, like it always is, and that it's not a sign that the economy is slowing. I beg to differ. I say it is certainly a sign, and it's probably the sign that, year over year GDP has been decreasing. These tax cuts were supposed to help the economy, but really it's just helping, major corporations, and it's only helping some. We're going to have to see what the deal is for, GDP, but you know, I think this economic data is showing me that the economy is moving in a sluggish pace. That's because we're aiming in a normalization. We're normalizing. We are raising rates. We are drying liquidity from the markets. And what's this? This is causing markets to take a hit. Markets need to react to this drying up of liquidity. Now, what we have going on is a classic example of look here, guys, nothing to worry about, and here's the problem. So, the problem is this liquidity, and we're just overdosing on it, and you know this cycle is going to continue of overdosing on liquidity. It's going to overdose and then come down, overdose and then come down. So we are on the verge of overdosing. What's happening right now in markets is, you know, the animal spirits have ran away, and you know the central bank shorting volatility isn't working anymore. We have bond yields spiking up. That's going to make it even more difficult for people to get liquidity. But just know these markets are fake. You know, these markets are an illusion to what the economy is doing and showing. So no matter what happens in the markets, guys, that this is what we're seeing. We're seeing an illusion. Everything is great. It's a mirage. But once this pool of liquidity dries up, guys, that this market is going to reverse course dramatically. People are going to find it more difficult to pay for goods, and it's going to be more difficult to, you know, be just stay at this pace without them dumping liquidity into the markets. We're going to have to see if the Fed wants to man up and continue even in a recession to normalize. That would be the key. If they were strong and normalized through a recession, then that would mean that we are on a greater path for greater good. That is the greater good, not serving the agenda of the elite. Now let's go ahead and get into markets. So we've been, I don't want to say rebounding, But this was, of course, always a possibility. And in markets, it's about possibilities. So, but what we're seeing though is an irrational exuberance. Look at here. Now we're at this 7,200 level, which, as this market was going up, I'm thinking, yeah, it's possible we could get to that 7,200 level. But I'm thinking, no, wait, that's really far ahead. I don't think we're going to get there. And look at here. We have just accelerated. This 3 minute is telling the tale. Let's check out other time frames. This 30 minute is showing an increase that's well above this increase here. And what happens when that CCI is getting spiked out? What comes up must come down. Again, I think this is just more of a natural bounce. We're probably going to get stopped at this 7,200 level. And now this would mean that the comp is failing this 38% resistance, which is critical. You know, it would be some sort of miracle that the markets could continue to withstand this 7,200 level. Now check it out. Look at the CCI, look at the RSI, guys. Look at the CCI. Look at how high we are. Look at how high we are. We could spike above that CCI, right? But I doubt we're going to get anywhere. I doubt we're going to get anywhere. If we end up holding today, we could have a better day Tuesday and they could set up for some interesting things. But what I see happening is us being somewhat strong and then kind of us failing towards the end of the day. That's what I'm seeing. Because this RSI is spiked out too much. That MACD histo is awfully coming close, so it's about to cross that MACD histo, and we're about to reset. Now, this is a pivot point in either direction. I would argue that we are this is irrational exuberance bouncing off of the top of this 38% as well as climbing above this trend line here. Now, once we're going to back down and we're going to back down off this 23%. So for this 30 minute though, we're seeing a parabolic Sarball switch. So today could be a good switcheroo and markets could trend up slightly higher, but even still, look at this rise up in the CCI MACD. It's unprecedented, and it's like we're having the morning spike on a chart. When a chart opens up, we're spiking up. That's what happens. So we are spiking up, and when you take the elevator up, you're jumping out the window down to your death. So we are doing a cup and handle pattern. So at this 50%, we are guaranteed to fail. So we could pop above this 38%, this 7,200, but I don't think we're getting above 7,220. We could touch above it, but I don't see it. We could potentially go more in this trade. Gold is holding steady. Dollar got a lower high. Bitcoin hit 9,015, back down. 10-year is backing down off the high, 29.83 yield. So markets are moving, and this is an interesting direction at where we're headed, but I still see this longer term viewpoint of us going down. We are going down, friends. Oh, well, that doesn't help. Yeah, let's play DDR, guys. Nah. Anyway, that's what I'm seeing in the markets going on right now. Now, I'm so wound up. I'm pretty sure I just went over this economic data. Yeah, I did. But they're trying to spin it. They're trying to spin it. You know, they're saying, let's look at this headline here. Ready, guys? Stock investors are freaking out about bonds ending a 3-decade bull run, but should they be? I mean, they should be worried about a liquidity crisis in 2018. That's what they should be worried about. The mainstream media has it all backwards. They don't understand normalization. They don't understand the situation we're in. They're dumb. They're absolutely without a brain cell, and it's very difficult to even watch interviews or watch them talk because they have no idea what's going on in the real world. They have no idea. They have no idea. They don't understand the mechanisms behind it. And even the economists that work at CNBC, I like that. I think the one guy, he's kind of robust. He's got a deep voice, maybe a bald head, a little bit of hair, no glasses, nothing. But he's our chief economist. He kind of lays it out as, but he says he goes and twists it and spins it positive, and basically if you're relying on the wealth effect uh, for a healthy economy, then that means when this market crashes, there's no more wealth, and you know you're fucked. You're fucked, guys. I'm gonna have to end it there. 11-minute video. We did a good job. I tried to make this video a little bit earlier and it came out too long, too intense. So we did a good job today. Please like and subscribe. I'll be back probably around 1-ish to update you on potential pivot points or movements in the markets. You know, I have a feeling that gold's gonna drop here again, but it's holding support, and I'm curious to see where it's going, in either direction. But for now, the markets are going up. And it depends on what happens today. At the end of the day, Friday we had ridiculous buying action that I covered. So that and Sunday we had buying action that aided in this up run. I see us failing though. Give this market a couple hours and it'll start to go the other direction. If it doesn't, then look for a spike up tomorrow, Tuesday, and then that pullback Tuesday. Well, this is Market Michael here. Thank you very much for watching. Please like and subscribe, and I will see you in a little bit.